So today is the day that I am going to learn ICT. Now, before I actually get into learning ICT, I actually wanted to talk about something that's a lot more important, I think, personally, than actually going out and learning. There is something that we've got to keep in mind before we kind of go and expand our knowledge. And I know a lot of people have already been commenting about, like, why would you have to go out and learn something if your strategy works? If something isn't broken, why go fix it? And that's so true. However, I think there's such a key difference between switching strategies, having the grass is greener over there kind of mentality, and then also, when you have kind of like a solid foundation and you're genuinely wanting to just sort of like expand your knowledge, kind of be able to look into credible sources and resources and kind of like pick what you kind of want, what you kind of need, what you kind of like think may work with you, go test it, and then kind of discard the rest. I think that if the markets are evolving, that we should be evolving as well. I personally think that for those who don't believe that or see that, they might not have actually been consistent in the market long enough, or consistent with their own trading system, or consistent with their own trading rules to kind of see that through, because the market does shift, mentalities do shift. The markets are a lot more dynamic than we think, And I personally think that there's nothing wrong with kind of expanding your knowledge and building on your arsenal. However, yes, massive difference for those who are going to just completely switch strategies, give it a go, completely give up, go into a whole new strategy, give it a go after a couple months and then give up. I think that's not the mentality we want to go here, and this is what I want to actually point out before we even get into the learning, because this is so much more important. I think there's going to be a whole lot of self-awareness and self-reflection that's going to have to be done every single day. I can't skimp out on that, because if I'm trading on a live account with my main strategy and then kind of like building on and learning ICT concepts, to be able to just divide my attention and my focus between the two and my energy to sort of just like compartmentalize just between the two strategies, that's going to be very difficult. And I know that can take a toll on my psychology, my focus, and my overall mindset and discipline. So in order to mitigate that, what I'm going to have to do is just be self-aware from the start, to go in there with intentions as to why I want to learn, and it's not to just completely change my trading, not because I'm getting loads of comments on ICT, or not because so-and-so is making so much more money, right? We're going in there just to learn, to build, to grow, and we're open to discard what doesn't work for us. We're gonna test these things. I'm gonna go see what works for me and what kind of works with my trading personality, and if it doesn't work, then I'm not gonna do it. So with that said, we want to be intentional as to why we're going out to learn, being open-minded that it's okay to learn, to grow, to evolve. And when we know that we're not coming from a place of scarcity, and I have been looking into SMC, institutional style trading, since the end of 2020. Like, you guys have seen me have my main strategy and talk about a sub-strategy. And what I've basically been able to do for the past year and a half is trade my main sort of funded account, and then was paper trading that then into a small account. I think around early 2021, I was talking about it, I think, in previous videos, where I was trading that on a small account. And then you guys have seen my evolution as I've started to talk about imbalance and sort of like order blocks and things like that. You guys see that in my backtesting videos as I start to like show you more of that sub-strategy. So I think that's just all I wanted to sort of speak about, was the psychology behind it, and the like how much self-awareness I'm gonna have to have, and if you're learning with me, then you're gonna have to have. And that's definitely way more important, I think, than actually going to learn it, because you don't want to go into learning concepts prematurely if you haven't got your psychology down, if you haven't got your discipline down, if you haven't got your own trading plan down. So please keep that in mind, guys. Like, I don't want to be liable for anyone going to learn ICT just because I'm learning ICT, But yeah, today's the day. We're gonna go learn it. A bit of a confession, that previous clip and this clip, had to re-record it because first time I filmed it on the day that I actually was learning, which was basically yesterday, the microphone was not hooked up to the camera, so when I'm editing it this morning, there's no audio, which is kind of annoying. But the next thing that I wanted to speak about and just kind of put like a little disclaimer is that I personally don't think that ICT is beginner friendly. And I'm saying that as an assumption. I can be completely wrong, right? But because obviously this video is gonna go out before I can kind of make a true judgment, I'm just gonna kind of put out there, like, if you're completely brand new to the markets, I don't think ICT could be the one. And I just wanted to put that out there because I've had in the past where I go say that I'm in this community, or I go say that I'm doing this, and a lot of people follow and do that, and then I leave that community and then they kind of get really upset. They're like, I joined this community because of you, like, where are you? And I just don't want that to kind of happen, but obviously make your own decisions. I'm just gonna say, like, as an assumption, again, I can be completely wrong, and I might probably take this back, who knows? I just don't think this might be beginner friendly. And yeah, enjoy the video. So with what Michael just said, it kind of explains, you know, what I talk about when there's a pause in the market, you know, the mechanics as to why this happens, especially on a lower time frame, and why I'll take a trade that's like pushes up, it breaks, and then we get on that retrace. It's basically sort of, if we're anticipating momentum to the downside, this little pause in the market, we're kind of taking out all the liquidity here that's around this area, and then that kind of fuels the liquidity to the downside. The same way with inside bars, where you have price that just kind of like pauses on an hourly time frame, that basically translate on a smaller time frame into, you know, whatever it may be, you know, it could look like that. And obviously with the answers as to, you know, why this happens is because price here and then here fuels liquidity to then move to the downside. So yeah, that's interesting that he said that, and I was quite aware of that, but like just seeing it from how he speaks about it was just cool.
Yeah, don't take my word for it. You're gonna be flabbergasted. You like that? Flabbergasted when you see how many times this thing forms.
Oh man, this guy, he's funny. I like him. I feel like I have to kind of make it comedic, or like just smile when I'm learning, you know, because otherwise it doesn't stick in. So almost 2 hours later, just finished episode 2, well, my first episode of the ICT Mentorship 2022. A lot of cool stuff. There's a lot of stuff that I've heard before, and some new things. And it was kind of like reminding me end of 2020 when I was looking into this. One thing I did learn that was new was, you know, the reasoning as to price gravitating and all these algorithms and stuff like that. I see where people can get overwhelmed with this information. This is why I guess my assumption of, you know, this may not be the best way to learn if you're a new trader still holds true. You know, I still feel like, you know, if you're a beginner, then please be very, very cautious. It is overwhelming. There's a lot of new terms, liquidity, highs, sell stops, stop hunts, and all that stuff. That's quite new. Again, I think I'm only saying that because of my experience in where I came from, learning patterns and like reversals. It was quite easier language in my opinion. I think I need to take a break. I got very cold, so I put on the thermal. Don't know why I said that. But yeah, he ended and concluded that episode saying, you know, if let's say we had weekly weakness, we're looking for a run above the old highs, i.e. those buy stops liquidated, and then looking for that break of structure on the lower time frame, ideally with some imbalance, because then that's where we could take our short entry, get triggered in, and then we would set a liquidity matrix for our exit, you know, looking for like imbalance on the left hand side, that may reside just below like sell stops. Kind of all makes sense theoretically. It's if we can apply it and see that in the charts time and time again. And for me, it's really just keeping on top of like doing like forward testing it, so seeing it in the live market and then going back to back test. A part of me just wants to go into episode 3 straight away, but I think I'm gonna take a break and let it marinate. Cool thing about like documenting it is I feel like I'm learning it twice, because I've got I've got to edit the video.
Can't I just die here on the beach with my fingers in the sand and the water at my feet? Can I just get some release? Yeah, everybody falls off the tippy of they tall talk. Don't come and talk to me. I ain't trying to see fear reflections in my rear view, deflectors in my purview coming after me. Got some issues with my worldview, I iron out the kinks. I ain't trying to be king, crowns ain't the way to bring love. Soft touch, hard hands lead backwards and
it's currently almost midday. I've just kind of eaten and rested my mind a little bit. And I know I said that I might take like a longer break, like I was gonna go gym and then kind of get back into like the next episode, which is episode 3, but I think I'm gonna like just watch it, see how it goes, and then maybe probably need to rewatch it. We are on episode 3, and these were the notes I've taken.
Alright folks, welcome back. This is the internal range, liquidity, and market structure shifts.
10 seconds later.
It's come to the point where I think I'm gonna take a proper break. It's getting a little bit more complex, in the sense that I'm just zoning out. It's not even complex, it's just I'm zoning out, and I think time for me to hit the gym.